Good evening. Hope you all had a great day. Today, the market started fairly deep in the red, but ended the day with a late rally and all three major indices well into the green after the volatile day of trading. The S&P 500 ended up 1.10%, while the Nasdaq followed suit with a gain of 1.09%. The Dow gained a better 1.18%. The gains were led by the major banks, as it was announced that U.S. banking regulators are about to ease restrictions created in the aftermath of the Great Recession. The Federal Deposit Insurance Commission officials said that they are loosening the restrictions from the Volcker Rule, which would allow banks to make large investments into venture capital and similar funds easier. The banks will also be able to avoid setting aside cash for derivative trades between different units of the same firm, potentially freeing up billions of dollars in capital for the industry. The Volcker Rule is part of the 2010 Dodd-Frank Act, which was passed in an attempt to prevent another financial crisis caused in part by irresponsible risk-taking at banks. The Volcker Rule was designed to prevent banks from acting like hedge funds. The general principle is that they are allowed to facilitate trades for clients, but not allowed to strap on risk for big proprietary bets. The FDIC and the Office of the Comptroller of the Currency are set to vote on the rule changes. The Federal Reserve and the SEC must also sign off on it. The move to relax margin requirements for swap trades between affiliates of the same company could free up an estimated $40 billion for the industry, according to Bloomberg. That capital could be used to help bolster other parts of businesses that are now being squeezed amid the COVID-19 crisis. Bank stocks ended the day up more than 3 to 4%. After the market closed, the Fed announced that banks must keep their Q3 dividends at Q2 levels, and they are not allowed to buy back shares in the third quarter as a means to preserve capital. The big news of the day was the weekly jobless claims and unemployment numbers. Jobless claims totaled 1.48 million last week, as unemployment related to the coronavirus pandemic were above expectations of 1.35 million jobless claims. On the bright side, continuing claims fell by 767,000 and is now below 20 million for the first time in 2 months. Quote, initial and continuing claims point to gradual improvement in the labor market. Falling initial claims signal that the pace of layoffs is slowing, but it is still extremely high, according to Gus Foucher, chief economist at PNC Financial. Today, Texas announced that they would be putting a pause to the reopening plan, as the state continues to see a rapid rise in cases and hospitalizations. Quote, the last thing we want to do as a state is go backwards and close down businesses. This temporary pause will help our state corral the spread until we can safely enter the next phase of opening our state for business, according to Governor Abbott. Abbott previously warned that, quote, additional measures are going to be necessary, end quote, and the state will have to take, quote, tougher actions, end quote, if the number of cases and hospitalizations continue to climb at current rates into July. He has previously defended the state's reopening plan by saying the state's hospitals remain at the lowest threat level and have the ability to add surge capacity if necessary. On Monday, Governor Abbott said, quote, if we were to experience another doubling of those numbers over the next month, that would mean we're in an urgent situation where tougher actions will be required to make sure that we do contain the spread of COVID-19, end quote. Due to the recent rise in cases, Apple again announced that they'd be closing more stores. They announced that 14 of their stores in Florida would be reclosed starting this Friday. Just yesterday, Apple closed 7 stores in Texas. An Apple representative said in a statement, quote, due to current COVID-19 conditions in some of the communities we serve, we're temporarily closing stores in these areas. We take this step with an abundance of caution as we closely monitor the situation, and we look forward to having our teams and customers back as soon as possible, end quote. Apple stores tend to be in important shopping centers and malls, and can be seen as an indicator of how smoothly and where retail operations can reopen in the United States. Apple has now reclosed 32 of its stores. For our last piece of news, I want to focus on the ineptness of the government. Today it was reported by the Government Accountability Office that nearly $1.4 billion in the form of stimulus checks were sent to people who have passed away. It looks like the IRS will be able to get some of the money back, but regardless, it is a laughable piece of news. Utilities was the only sector that did not participate in the strong day in the market, as the sector was down more than 1%. No one performed better than the previously mentioned financial sector, due to the potential easing of restrictions, as they gained close to 2.5%. Basic materials and oil and gas also posted large gains, both being up nearly 2% as a whole. Small cap as a whole posted a great day, after being beat down recently. Small cap core stocks performed the best, and nearly gained 1.5% as a whole. Regardless, no one performed terribly, and everyone gained at least 1%. The best performance in the S&P 500 came from National Oilwell Varco, which gained nearly 10%. No news came out about this company today to justify this move. Regardless, oil and gas as a whole posted a great day, and many energy names are among the top gainers today. The second best performance came from Accenture, which is a professional services and consulting company that provides a broad range of services. Today's earnings were bright, as they posted a double beat. Accenture beat on non-GAAP EPS by 6 cents, as they posted a gain of $1.90 per share for the quarter. Revenue came in at $11 billion, beating estimates by $110 million, and being a decline in revenue of a slight 0.9% on a year-over-year basis. Their gross margin grew, and they also announced that they would be pausing hiring as a means to cut costs during this time. Investors loved the news, and shares ended the day up 7.65%. The worst day came from Cabot Oil and Gas, which lost 4.19% during trading today. Again, no news seemed to justify the sell-off, but Cabot has been trading down recently after the state of Pennsylvania charged the company for the contamination of residential water supplies. The second worst day came from PulteGroup, which is a home construction company. Today's downward move of 3.72% came after news that fellow homebuilder KB Homes reported a surprising decline in second quarter orders. Credit Suisse called the 57% decline in orders as, quote, pretty shocking, end quote. Getting into earnings, we start off with Nike, ticker symbol NKE, which is the most popular athletic clothing brand in the world. Nike reported weaker than expected earnings as they missed on both EPS and revenue estimates. GAAP EPS came in at a surprising loss of 51 cents per share, which missed estimates by 54 cents. Revenue was at $6.31 billion, but still missed estimates by a large $950 million, and was a decline of 38% on a yearly basis. To top this all off, their gross margin was far lower than expected. Shares are currently down close to 3% after hours. Next, we have McCormick & Company, ticker symbol MKC, which is a popular food company that specializes in spices. McCormick capitalized on their opportunity to enter into more kitchens across the world during the pandemic, as they beat on both EPS and revenue estimates. Non-GAAP EPS beat by 31 cents, as they ended the quarter with a gain of $1.47 per share. Revenue had a slight beat of only $30 million, as McCormick posted a quarterly revenue of $1.4 billion, which was an increase of 7.7% on a yearly basis. On top of all this good news, McCormick even increased their gross margin. Shares started this morning in the green after earnings and ultimately ended up 3.64%. Lastly, we have Darden Restaurants, ticker symbol DRI, which owns popular restaurant chains such as Olive Garden, Longhorn Steakhouse, and the Capitol Grill, which is personally one of my favorite restaurants. Darden beat on non-GAAP EPS by a large 40 cents, as they posted a loss of $1.24 per share for the quarter. Revenue was in line with expectations, as Darden recorded revenue of $1.27 billion, and was down 43% on a yearly basis. On the bright side, Darden announced that it is in a strong position, as it has access to $1.5 billion of liquidity. That is all I have for tonight. As always, I wish you the best, and I'll see you again tomorrow.